Hello there and welcome to the webinar. Thanks for taking the time to join us here today. The presentation will be about 60 minutes. We'll see how we do on pacing the slides here, but that should be about the time frame that we have available today. Unfortunately, I will not be able to take questions during the webinar today, as I have a slight time difference issue here for the guys of you who are tuning in from the United States. It's late Friday night evening, and I have something to do here after the webinar. So if you have any questions that come up, please just go ahead and type them into the chat box here, and I will get back to those via email as soon as possible after the webinar. All right, so you can also get in touch with me directly at info@lissatrader.com. I think one of the biggest challenges in holding these presentations is to keep it balanced. It's not good to overwhelm traders that are just starting out with too much information, but on the other hand, if you're experienced, there is nothing worse than watching something that's just marketing spiel. So that said, if you know what we do here at Lissa Trader, there will be a 20 to 25-minute introduction to the basic concepts of our approach, and then we'll get into multiple timeframes and a workspace that I've created for that. And if you're not familiar with what we do, you might not get everything we're talking about here. You may want to swing by the Lissa Trader website after the webinar and sign up for our video course that will help you get up to speed on what this approach is all about. We also have a extensive free indicator library with some of the most downloaded indicators for the platform, so you may want to check that out as well. The indicators are programmed by none other than Harry, also known as Fat Tails. And he's, of course, well known throughout the NinjaTrader community, both in the support forum and over at what used to be Big Mac Trading, now Futures.io. Harry has programmed some of the most downloaded indicators for NinjaTrader, namely all of the ANA indicators. As for myself, I'm the co-founder and CEO of Lissa Trader in the NinjaTrader community. I'm best known for having brought modern sentiment analysis to the platform. With my previous company, CentiTrade, we developed a artificial intelligence algorithm that automatically read and interpreted financial news. So that was mainly for institutional investors, helping them incorporate sentiment data into algorithmic trading models and manage futures products. That also gave me insights to how institutional traders work. And about 2 years ago, we got bought out by a Swiss investment company, and then I started up Lissa Trader here with Harry. So just one last thing before we get going here today, I just quickly want to go over our disclaimer. Trading is associated with considerable risk, so please make sure that you understand that and keep in mind that the results from the examples that we go over here today are hypothetical and not based on actual performance. So today's topic is how to use our leading indicators in multiple time frames. We'll start by explaining what we mean by leading indicators, how they are found, and why they are so important for locating key support and resistance. And then we'll talk about how certain price action patterns present potential trading opportunities around these key support and resistance levels. And we'll do that in multiple time frames, as I said. So let's first talk about the institutional perspective of the market. They do account for some 90% of the volume. So the main challenge for them is to minimize market impact when submitting orders. The last thing that they want to do is to move prices when they take positions, and therefore they often distribute their positions into many smaller orders using market value to obtain the best price. There was a survey out recently showing that almost 60% of institutional traders use the volume weighted average price, or the VWAP, as a benchmark to control execution costs. Of course, partly because that's also how the bonuses of a lot of these institutional traders are determined. So they will get bigger bonuses if they get execution better or close to the VWAP. So what exactly is it, and how can we use it? Well, it's something that you can calculate for all instruments as long as price and volume data is available. So here we see a daily VWAP chart in the crude oil contract. The calculation starts with the first transaction of the current trading day, and it ends with the last prior to market close. So the VWAP is anchored here at the start of the full session, and then we have a red staple line here when the market is moving below the volume weighted average price. And when it's moving above it, we start seeing this blue staple line, and basically we use also these standard deviations here to determine value and oversold and overbought. So statistically, 70% of all transactions during the day will take place in this area, in the first standard deviation area. And that's where institutional traders are looking to enter the market. So in an uptrend like this, we want to buy when the price is retracing back into the VWAP value area. And then when we're approaching the upper second standard deviation here, we can consider exits. That's oversold here, overbought here. A really cool thing about this indicator is that you also have an overview of previous VWAP levels. And that in this chart we can see here yesterday's VWAP and the value area high and low levels. This is the lower first standard deviation of yesterday, and this is the upper standard deviation. This is yesterday's VWAP level. And so this is basically showing us yesterday's value area. A lot of the best trading opportunities that we'll have, that you'll see, is when the market is either trading out of value, or it is trading out of value and then fails to show continuation and reverses. So here we're trading out of value of yesterday and today, and we have this reversal back into the current value and the value area high of yesterday. So as you see, these levels here, the current day VWAP and yesterday's VWAP levels, they work as areas of support and resistance. A lot of dormant higher time frame orders will be parked in these areas, so you want to make sure that you're positioned in such a way that you can stock the odds in your favor. So we see here in the overnight, this is yesterday's VWAP serving as support. Then it's breaking down to the downside here, using this value area low as a next level of support here, and then failing really to show continuation here, coming back into the current day VWAP for resistance, and then value area high level of yesterday resistance, breaking this level and then coming back in. So really important to be aware of these levels. If you're coming in from below, there will be resistance, and once broken, and you're coming in from above on a retest, we can look for a long position. Other key support and resistance levels to consider are the pivot levels. Many of you are familiar with them, of course, based on a long tradition back in the day before we had powerful computers to calculate the VWAP. Floor traders used a simple range calculation to establish market value with the daily pivot and the pivot range. And with a couple of additional formulas accounting for the volatility of the last session, we can then find additional support and resistance levels above and below the main pivot. There is, of course, not much pit trading going on anymore, but the tradition lives on, and institutional traders will use the high, low, and the close of yesterday's cash hours to enter and exit the trades for the current session. That's especially true when you're dealing with markets that are dominated by local traders. So that would be index futures, bonds, and certain commodity futures. So by taking the high, low, and the close of yesterday, dividing by 3, we get the main pivot. Here we see we closed near the last session's high, and we then saw a test of the first resistance level in the pre-session here, and then a test of the first support level, and basically the distance here between R1 and S1 equals the distance between yesterday's high and low. So it's yesterday's range here. So if the market is oscillating between these levels, it's range bound. We then saw a test here of the second support level at during the regular session. That again is equal to yesterday's range. The distance from the main pivot to the second support level equals this distance here between the high and the low. So if the market is trading all the way down to the second support level or up to the second resistance level, it equals a move in one direction to the range of yesterday. So this S2 and R2 level, which is above here, above the R1 level here, will often represent the high and the low of the day. And that's just something to keep in mind, and you really see why these levels basically work as self-fulfilling prophecy. It's very simple. It's completely transparent. It has long traditions, and everyone knows where these levels are located. So we're using basically these areas here to buy support and to sell resistance. And the reason for that is to you know that there will be buyers and sellers in these areas. So of course, resistance is where the sellers are looking to cash in on their profits, and they will often overwhelm the buyers and causing a price imbalance to the downside. And support will be where bargain hunters are likely to overwhelm the sellers, causing prices to bounce. So when you're getting in on these key support and resistance levels, there's really no doubt as to why you're doing what you're doing. This is based on factual information. There's no room for subjective opinions here. A big part of this is, of course, that the VWAP and pivot levels are factual, transparent, and most importantly, they're the same for everyone. No matter what type of charts or bar type you use, they will produce the same levels. Of course, you're then in a better position because you can anticipate and be in front of what is actually about to happen. If you're coming in on one of these levels, we're looking for a critical mass of traders to respond in a coordinated way to the same price levels at the same time. So let's go ahead and have a look now at how we can identify trade setups or trade entries around these key support and resistance levels. What we'll look for are certain price action patterns. We've developed the auction bars to alert us of breakouts from the current range or reversal patterns that plot around the upper, mid, or lower edge of it. Regarding reversal patterns, we distinguish between reversal and spike bars, and to help you remember the difference, there is a old Japanese saying that a spike that sticks out is very likely to get hit by a hammer. And this really speaks to the fact that they're very easy to identify on the charts, and therefore a lot of traders will act on them. Basically, a spike bar will tell you that prices were rejected at a certain level, and then the market then pushed back to where the candle opened. So what we're looking for is geometric makeup of the bar, the upper or lower shadow compared to the body of the bar. So for a bearish spike, we want the upper shadow to be considerably larger than the candle body and the lower shadow. And for bullish ones, we have to have a lower shadow, which is a lot bigger than the candle body and the upper shadow. So in the following here, I'm going to show a couple of pre-cut chart examples that explains the main points here, and then later on we'll get into some more recent examples from this week. But for now, we'll just focus on getting down the main concepts here. So the idea here with the auction bars is that the market is ranging some 80% of the time. So we're looking for reversal patterns around the higher time frame ranges. And that's what these horizontal lines are. That's what we call the auction range. It's a range generated by a secondary bar series. So again, we have a 5-minute chart of the crude contract here, and the higher time frame range, the auction range here, is generated using a 60-minute time series. So once we see a sudden move like this one, breaking the current range, a new 60-minute range will start plotting. Here we see a bullish spike form right at the lower edge of the new auction range. Again, for these spike bars, we're looking at the geometric makeup of the bar. So in this case, we want the upper shadow to be, or excuse me, the lower shadow to be considerably larger than the candle body and the upper shadow. So later on, we see a test of the upper range, and we see a bearish spike here with a large upper shadow. There's a lot more going on in the background here than just defining the higher time frame ranges and the high, low, and close of the primary bar series. We also look at the significance of the range and volume. So that should be average or above average for the spike bars. We can also define a minimum shadow size of the spike bar. So I think we have as a default value here, 45%. You can set this yourself, of course, according to your risk tolerance level. If you set 70%, obviously you will get less signals, but probably more reliable ones. And then finally, we have a swing strength definition by this zigzag filter here, and that's marking the lower low of the last X bars, or the higher high of the last X bar. So here again, the default value is 5, And as I said, these and a couple of other settings will allow you to customize the signals according to your own risk tolerance level. As for the reversal bars, they build on the same concept. We're looking for price rejection, but reversal bars are not as easy to spot on the chart. We're comparing the high, low, and the close of the current to the previous. So in an uptrend, we look for a higher high followed by a lower close. We then have a reversal down. There are other reversal bar definitions as well. So you can require in the indicator to have a close below the low of the previous bar as well, for example. But for now, we'll just stick with the bars that have made a higher high and a lower close. So it's the inverse for reversal up patterns. We're then looking at a lower low and a higher close. Again, we have a 5-minute chart of the crude oil contract with a 60-minute trading range. And we see a higher high and a lower close here than the previous bar, plotting at the upper edge of the range. And then we have a test here of the mid-range. And then we see this breakout to the downside with an outside close of the range. And from then on, we will look to create a new auction range, painting horizontal lines of the last 60-minute high and low levels. And then we see here there is a new test of the new auction range with a lower low and a higher close, marking this a reversal up pattern. So as with the spike bars, we can also define the properties of the reversal bar by looking at the significance of the range and volume of the reversal bars, and it's then comparing to the previous reference period here. And we can look at also the swing strength definition, how many bars we're looking at in order to define the higher high and the lower low than the X previous bars. And we can also look at where the reversal patterns should plot. So you can, in this example, I've used the ranges. So I'm just looking at reversal patterns here at the lower range or at the upper range. But we can also tell the indicator to look for reversal patterns at the mid-range. You can also tell it to look for reversal patterns outside the range, or you can ignore the range entirely and just plot the reversal patterns on their own. As for trade entry, a bearish reversal pattern is confirmed once the price moves below the low of the setup bar. So we have we need to have a lower low take out the low of the setup bar. So you can work with a stop limit entry here, for example. That's triggered when this level is reached, and you can set this trigger to occur within a specific time window. So you can say that this lower low needs to be taken out within the 3 next bar from when the reversal bar plotted. So once the signal is triggered, the stop loss is set above the high of the setup bar. For long entries, it's pretty much the opposite. We need to see the price move above the high of the setup in order to confirm the signal. The stop is set below the low of the setup. Again, you can work with the stop limit entries here. Not sure how many of you use Blackbird, but it's a really good way of managing your trades. Blackbird from Shark Indicators allow you to create trading signals with stop limit entries. So our indicators do have data series where you can automatically set a stop limit orders at the high or the low level of the setup bar, so that the trade is entered at the moment when the level is broken. And then we have another data series that will locate the high low of the setup and place the stop exactly where it's supposed to be. All right, now we'll talk about how to use these price patterns around key support and resistance levels and trading ranges in multiple time frames. We'll start with a broad overview. Traditionally, anything more than six months was considered a major trend, and intermediate between 3 weeks and 3 months, and the short term anything less than 3 weeks. But as day traders, I think we can consider something as short as 3 to 5 days to get a broad overview of whether there has been a major move, or if the market is range bound. The intermediate will then be the last 24 hours or so, and we are looking to time our entries in the short term with a perspective of the last few hours, maybe in something like a 5-minute chart, or using another low resolution tick volume or range chart. Still, I like to have a look at a daily a chart with daily bars once in a while, if nothing else, to get a general idea of the monthly range and pivot levels. That's what we see here. We have monthly pivot levels. It's basically the same calculation as what we looked at earlier. It's only that you have the month high and the month low, and then where it closed at the end of the month. Of course, these levels are not hit very often. However, when prices do interact with these key support and resistance levels, there's usually a reaction, so it's a good idea to be aware of them. We see here the first test of the monthly pivot and a continuation of the trend. We see here a first test of the high of last month, and then a retest of the close of last month, and then a continuation. Here again we see a first test of the monthly pivot, a bounce off of that. We see a test of the first resistance level. Seeing that these levels are not hit very often, I've included midpoints for the monthly pivot levels. These are also included as a data series in our indicators, so really easy to keep track of them. Again, we're really talking about buying support and selling resistance at these levels. You also may want to have a look at whether we have a narrow pivot range or a wide pivot range. A wide pivot range is more important than a narrow range because it really tells us who was in charge last month. A narrow range doesn't really tell us anything about that. Doesn't tell us anything about direction, only that last month was basically a draw between the bulls and the bears, and that we're now waiting for a price catalyst. So on on narrow pivot ranges, we're likely to see these directional moves. We're waiting for the catalyst here, and for the pivot ranges that are wider, we're looking more at retracement or a consolidation. As for a trend here, we don't really see one. We have short periods of higher highs and higher lows, but then we have lower highs and lower lows, and it keeps on going back and forth here. A uptrend should see consistently higher highs and higher lows, or a downtrend lower highs and lower lows. So moving along here to a more day trading relevant broad overview, we've just seen a weekly pivot chart here. So this is 5-day overview about, and we have a 30-minute chart of the crude contract, and obviously we've had a downtrend here from the previous week, with the zigzag consistently setting lower highs and lower lows last week. Also, we've added daily auction ranges here. As you can see, there are pretty defined breakouts to the downside of these ranges, and the retracements back into the range are pretty weak. They rarely make it above the 50% level, and that's of course a sign of a pretty weak market. So at the outset of this week on Monday, we opened in the upper area of Friday's range, leaving a gap to last week's close, and then setting a higher high here. In the intermediate perspective, the last 24 hours or so, we have a 15-minute chart here, and auction ranges of the last 6 hours, and we have a rolling VWAP in this chart, and that's showing us the volume weighted average price of the last 3 days. We can use that as a trend filter. So if the rolling VWAP is sloping down, showing a red staple line like this, we're looking for short setups and blocking any long setups. And this gap that I talked about in the previous chart really sort of stands out here. There's a really high probability of this closing. So when reversal patterns plot at the upper edge of the auction range, it's time to start paying attention. The idea here is really to align this broad overview that we just looked at with the intermediate perspective, and then use the short-term chart to time the entry. So in a downtrend, a near-term correction or retracement to the upside can be used to locate these short entries. We therefore want to consider entries consistent with the broad and intermediate perspective. And at the open here at the European session, we saw a down reversal bar showing up as a potential entry, possibly going all the way down here to fill the gap. And we also have yesterday's VWAP and pivot level here, making this a really interesting target for the market to address. So we see this reversal pattern here, plotting right at the upper range of the current auction range, approaching the second standard deviation after a breakthrough here of yesterday's high. However, consider how this is going straight against significant support levels, namely The pivot support level here, this was resistance, but once it's broken through to the top, it will become a support level. And also this value area high, VWAP level of the last session. Therefore, probably better to wait and see how the market responds to a retest of these levels. And yeah, that's in this example exactly what happened. We had a test of the pivot support of the current VWAP and a retest of yesterday's high up here before we got a test of the value area high level, and then the cash open here, session break, and we got this reversal signal right here coming in from below of the current VWAP, and sure enough, this gap closed. So let's go ahead now into the chart and look at some other trades. So I'm going to end this. So here we see we have the daily chart that I showed to begin with the monthly pivots and the monthly midlines. And here we have the trade entry chart. So let's go back to this. I was a little bit far back. I wanted to just show you for this week. Let's see here. All right. So we just looked at this one. And then let's have a look at Tuesday. We got stopped out on a reversal trade here. Nothing wrong with this this setup. We're coming in here in a downtrend, reversing back up here and getting the reversal bar or spike bar. Looks like this is. And this auction range is just new auction range is just plotted here, and then we get stopped out as this level here is hit. And here we have a similar situation, but to the upside. We're now looking at long trades as well, because the intermediate perspective here, VWAP, has turned to the upside. So we're now at Wednesday, and we have then long trades also activated. And we see we take off some risk as we're coming into to this major area of resistance here. We're going into yesterday's close, pivot, and VWAP level, although these levels have already been tested here. So in the cash session, tested 1 time, 2 times, and on the third, it either goes through or it really goes to the downside. So this turned out to be a really nice setup with prices going all the way up to the second resistance level, which also turned out to be the high of the day, as it often is. As I said earlier, the distance between the pivot level here and second resistance and second support equals the range of yesterday's session in one direction. measured from the pivot. We had here yesterday a similar situation. We're coming in on the VWAP level, and we're taking off some risk on that, and we're trailing the second contract. So the way I've set this up, I'm working with Blackbird here, and I'm pulling in the strategy that I've talked about here. I'll show you quickly how that's set up in Bloodhound. Bloodhound is a visual programming tool that can allow you to define the trading rules. So I have here stating that any price action setup that I'm looking at needs to take place within the value area of the VWAP, and I'm looking to take reversal patterns of the VWAP levels, the pivot levels, and the auction ranges. And I'm using the rolling VWAP as a trend filter, and then I'm pulling in the price action patterns from the auction bars. And then I have a exit template as well that is looking at these major support and resistance levels here. So if the price is moving in on this VWAP level, and I'm in a long position, I will take off one contract, and I will start trailing the second contract. And you can do that with Blackbird. We have two contracts set up here. The strategy is pulled from Bloodhound. I have stop limit entries, and the first exit is taken if I'm up 10 ticks and I'm going against one of these key support and resistance level. I take off one contract and I start trailing here the second one. I also have a couple of very general money management rules in here in Blackbird. So I will not take higher losses than 750 a day, and I will also not take more risk on a trade than $500. So a really neat feature of Blackbird is that it will trade fit the trades here depending on that. So in this case, it is looking here at where my stop is and where my entry is. We have here two contracts entered because the risk on this trade will not allow for more than two contracts. I think the previous trade here had also two contracts on this one, but I had another one this week where I had four contracts, excuse me, because the risk on this trade was lower. So we had here about 10 ticks risk. So we entered then with four contracts on that. All right, so I hope that explains a little bit on how you can use this in multiple time series. As I said, the broad overview here is this weekly chart. This is where we started out of the week with the gap here, and you see here this is turning into more of a ranging market with all the stuff that's been going on this week. There's no wonder. So it's good to know that in the overall perspective, also to keep track of these levels here. We're coming in on a mid-level here between the weekly pivot and the first support level, and then we use this intermediate perspective from the rolling pivot VWAP, and we use that as a trend filter. So we also see this ranging market reflected in the flickering here from red to blue to red to blue to red to blue, and then now we're over to red again. So this is going back and forth at the moment in a ranging intermediate and broad overview. All right, so now we're going to head back into the presentation, and let's see if we can find the slide where we left off here. Yeah, as I said, this is the template that I've created for this particular concept. This is the intermediate and the short-term view. I have here the rolling VWAP as a trend filter in here, and then the rest of this is based on a 5-minute chart. So we pull the key support resistance levels created by the VWAP and pivot indicators, as well as the auction ranges, to time the entries using the price action signals created by the auction bars. Basically, we want to take these reversal patterns when they align with the pivot, the VWAP, and the auction ranges. All right, so I also wanted to have a quick look at a backtest that I created for this. As I said in the introduction, it's really important to know whether your strategy has a statistical edge. So this is what we've got here, a plus of 18,300 for the last 12 months or so, profit of 1.64, including the commissions of 1,430, a max drawdown of 3,340. Percent profitable, about 52%, or 51.67 to be exact. And yeah, that's for the back test. As I said, I am using Bloodhound and Blackbird to create and manage the system. You may want, if you don't have those add-ons to NinjaTrader, you may want to consider purchasing those through us, as we can then offer complimentary consulting sessions showing you how all of this comes together with our indicator packages. That would then be a consulting arrangement. My rate for that is $99 or $100 per 45 minutes. And if you're interested in that, you can just send me a email at info@lissatrader.com. I'm going to ask you to leave a deposit, and we'll talk about it, and maybe you can become a client for that. All right, so we have a special webinar offer here today. You've spent the last 30 or 40 minutes watching the webinar, so I guess you have a pretty good idea as to why it makes sense to work with these objective price benchmarks, and how to time the entries using the auction bars. The indicator packages are quite extensive, with weekly and monthly calculations, in addition to the daily pivot and VWAP. We also have the rolling variations, and yeah, there's a lot of value for your money here. No questions about that. We also have a couple of bonus specials included in the offer. We have a free consultation for the first 3 registrants here today. That can be according to your needs. For example, how to create a system using Bloodhound, what you need to avoid the most common system trading pitfalls, or it can be a action plan for taking the next step with the systemic trading approach. So that will be largely up to you how you structure that. Second, we have the strategy templates with all the parameters for defining price action patterns in areas of market value and these institutional price levels that we've talked about. This particular template was created for crude. Each market has its signature, but seeing that this is a universal concept, you will be able to adapt this to other markets as well. And finally, we have our session template handbook that will teach you all you need to know about how to isolate specific trading times where institutional traders are active. So I mentioned earlier, when you're trading markets dominated by local traders that have a strong tradition for using price data from the regular session, you want to make sure that you have the correct price data so that you get the correct support and resistance levels. These guys use the high, low, and the close of yesterday's cash hours to enter and exit trade, so it's very important that you reference those levels and not the Globex levels if you're trading those markets. That's the caveat. For Forex products, I think the ETH setting is probably more relevant. We also have some Jackson zones in this pivot indicator package, which are very popular for Forex traders with adjacent Fibonacci levels. So what we've done here is to put everything that we just covered, everything we talked about regarding auction bars, institutional price benchmarks, the session template handbook, the strategy templates, into a promotional offer. Normal value for all of this is just north of $1,000. So at a total price of $695 here today, you get more than $350 off. Everything you need to get started on this is right here. So I should mention again that the consulting bonus is only available for the first 3 registrants. So if that's something that you're interested in, don't delay on this, because they will go pretty quickly. If you already have our auction bars and you want to expand now with the premium VWAP and pivot packages, the price for that, including the bonus offers, is $495. So that's about $200 off. Of course, another good reason to get in on this now is that NinjaTrader 8 is very close to launching now, and we will update our indicators for that, and that will be reflected in our prices for the new version. We expect our prices to go up some 20 or 30% for NinjaTrader 8. Of course, if you get in now and get the versions for NinjaTrader 7, you will have a free upgrade for NinjaTrader 8. So that's another good reason to lock in this price right now. It certainly will not get any cheaper than this. All right, I think that's pretty much what I had prepared for today. As I said, if you have any questions, make sure to type those into the chat box now so that I can get back to you after the webinar. As mentioned in the beginning, I unfortunately won't be able to take questions during the webinar today, as it's getting late on a Friday evening here in Berlin, Germany, and I have some engagements going into the night here. So yeah, just to round things off, I usually sum up what the Lissa Trader approach is all about and why we chose the Lissa Trader name. Most of the time it looks as if they're sitting around basking in the sun, but these guys really have a very sharp eye for what's going on around them. Instead of running around chasing down their prey, they've learned that the most efficient use of their resources is to sit patiently, listening and looking and waiting for the right moment when there is an opportunity to grab what's right in front of them. And for us as traders, there's definitely a lesson to be learned here. It pays to have a clear and simple strategy that you can actually understand. You want to keep track of these key support and resistance levels and anticipate areas of coordinated buying and selling with these price action patterns that we've talked about. Once you've seen how prices react to pivot and VWAP and auction ranges a couple of times, you sort of get it. So I've given you a ton of information the last hour or so, but information alone will not get you there. Everything we talked about, everything you need to get started on this is available at lissatrader.com/webinar-deal. If you already have Bloodhound and the session pivot and VWAP indicators, there's also a mini offer for the auction bars only. But as I said, you don't want to wait too long on this, as we only have this particular offer up until the end of the week. So it's coming down on Sunday night at midnight EST. Okay, so with that, I would like to wrap up the presentation here. And again, you can get in touch with me via the contact form over at Lissa Trader. Otherwise, that's info@LissaTrader. And I'm also available for one-on-one Skype calls if you'd like to speak with me personally. Thanks a lot for checking in. I hope it's been of value to you, and I look forward to speaking with you very soon. Take care, and bye-bye.